Joining us on the phone now, Clark Hodges, a markets expert. As we start to see what's really going to happen with the Brexit, a lot of uncertainty with the markets, huge losses around the world, as uncertainty really took over after the vote that Britain would leave the European Union. But it seems like we might be back on the right track. Clark, good morning.
Good morning. How are you guys doing today?
Doing really good. So if we open up that investments folder, go onto the website, as many people do right when they get into work or kind of early in the morning, should we still be bracing ourselves? Are we kind of on the uptick at this point?
Well, my recommendation to most people is don't follow it too closely. Mm-hmm. Don't live and die with it like a sporting event, because you can follow it too closely and you could get scared out of your investments, especially when you see a day or two like we had last week where Brexit forced the markets down, hundreds of points. The market has recovered. If you pay attention, you know that the Dow is back within 100 points of where it was before Brexit. So you've had two really good days of selling, followed by two really good days of buying. Mm-hmm. So I feel like most people should have just stayed the course and not reacted to it. Hopefully they didn't, like sell 2 days afterwards and buy 2 days later, because they would be selling low and buying high. And that's definitely not what you want to do.
Yeah, that's the wrong kind of mix for sure.
Yeah.
What do you think it is? Is it the media that plays the biggest role in this? I mean, do we make people panic?
Yeah.
We make people panic.
Yeah, it's definitely the media. There's way too much coverage. If you go back 20 years, I've been in the business about 25 years, and when I started in the business, you got your stock quote information in the newspaper the next morning.
Right. And
you got 1 minute maybe on the 10 o'clock news about what the stock market did that day. So now you look at it today, and it's like a sporting event. You've got several channels covering the same thing, and you can sit there and watch these channels and say, oh, that guy's pretty smart. He knows what he's talking about, and he's saying sell. And then 20 minutes later, you got another guy on there, and you think, well, he sounds pretty smart, and he's saying buy, and you get confused. And I've had several situations in my career where 5 minutes to 3 o'clock, when the stock market's about to close, somebody calls up and says, hey, give me out, give me out, give me out. And what people don't realize is that this thing starts all over the next morning. There's no end to this game. There's no final whistle. You've got today's trading, but we know 100% sure that it's going to open up and trade again tomorrow. And so when you're panicked because you're watching some quote-unquote expert on TV telling you to sell, it's usually the worst thing to do. You need to stay the course with your original investment thesis that you came into the market with.
Now, do you think people that are closer to retirement age, obviously, they would panic a little bit more?
Sure. You've got people that probably are saying, oh, I've owned some of these companies for a long, long time. They pay a nice dividend for my retirement plan. And they look up on these days following Brexit and say, man, my account value is down 4% today, or my favorite holding is down 3 or 4% just today. And so it can make you very nervous, because you're sitting there thinking, well, I need this money to live on here in a couple of years.
Yeah.
And so I understand by far that isn't the possibility, but human nature is really more important in investing. How you react to negative news is really more important than actually getting in the market. And if you can just hold off and say to yourself, okay, don't panic, don't panic, don't panic. There's a reason I bought this stuff. There's a reason I sat down with my financial advisor. I have this strategy. Stick to it, and don't let one day chase you out of your overall goals.
So you said, obviously, you've been in the business for more than 20 years. Do you think if you are someone who is nearing retirement age and you have the bulk of your money tied up in the stock market, that maybe this should be a sign that you should diversify if you haven't so already?
Well, I'm a big believer in everybody, no matter what their age, needs to have a good amount of their money in the stock market versus the bond market. Huh. Even if you're 70 years old, I'd say you still need some money in the market that's going to grow for you over time, growth-type vehicles. Now, if you're 70 years old, I would say only maybe 20, 25% of your overall net worth should be in those kinds of things, because you need to be conservative and say, okay, I need to live off some of this money and be more income-oriented as to growth-oriented. But at the same time, most everybody's problem is going to be outliving their money.
Yeah.
And people are living longer. My father, who was 80 years old, never bought a bond in his life because he didn't like the fact that bonds didn't keep up with inflation. So even at 80 years old, he was buying growth things for himself, but he had the majority of his money in dividend-paying type instruments, the quality blue-chip names that you would recognize that pay a dividend, as opposed to going to a bond and trying to get a smaller yield. If you own the stocks that pay the dividends, you get the potential for upside movement in the stock price as well as the dividend yield that you're getting.
Very
Great
interesting.
Conversation, yeah.
You know, back kind of to the Brexit thing, you know, we talk to Peter Greenberg every morning here on the show, and he had, you know, some tips as if you wanted to travel to the UK about how much stronger the dollar was now and how, you know, prices even for hotels with the conversion rate that it was might have been around 60% of what they were before this vote. Are we still seeing that trend, or has that leveled off as well?
Well, the currency game is a whole different ballgame from what I know a lot about, and I'd say that's probably going to be a volatile game in the next probably couple of years, actually.
Yeah.
And so you may take advantage of it and benefit from it, but at the same time, the currency situation and the currency manipulation that goes on in the market is a little bit over my head, to be quite honest with you. And I wouldn't go in and play that game. But if you can book a flight right now and get over there and stay in a hotel for 40 or 50% cheaper than you could 3 weeks ago, you know, you definitely might take advantage of it.
The backstory doesn't matter. Just go ahead and do it.
You can go to New York when our dollar is weak and walk down the street, and all you hear is foreign accents because they're over here, you know, on vacation.
That's right.
You know, having a great time because they're going to Tiffany's and buying everything because it's so cheap for them compared to living in their country.
Wow.
All right. Well, Clark Hodges, thanks for the insight. We'll continue to watch this. You know, really, he had a really great point about it just being a long game.
Yeah.
Where, you know, don't live and die by the day to day. Just kind of let it happen.
You gotta.
Very interesting stuff.
You gotta let it, you know.
Coming up, Kim Commando and Bernie has a check of news, weather, and traffic at the bottom of the hour.
I do.